Imagine a company that doesn't just analyze data, but actually takes all your messy, chaotic, real-world data and turns it into real, actionable intelligence. I'm talking about intelligence that drives decisions in the most critical environments on Earth, from literally life-or-death counterterrorism operations all the way to massive, complex commercial manufacturing floors. Well, that company is Palantir Technologies. Welcome to this explainer. I am absolutely thrilled to guide you, the focused learner, through this data-backed breakdown. We're going to tear down Palantir's technology, look at their explosive financials, and dig into their stock valuation to see exactly what is driving this absolute powerhouse.
Okay, let's dive into this. We're looking at a company that is fundamentally reshaping how huge enterprises and entire governments actually operate on a day-to-day basis. So today, we're asking a massive question. Is Palantir the ultimate AI compounder? Are they the hidden giant that investors have been patiently waiting for, despite what is undeniably a premium price tag?
Here is our quick roadmap for today's explainer. We'll be covering 1. The AI operating system. 2. An unbreakable competitive moat. 3. Explosive growth by the numbers. 4. Premium valuation and elite profitability. And finally, number 5, the final investment verdict. Let's get right to it.
Starting off with Section 1, the AI operating system. From defense contractor to commercial powerhouse.
You know, to truly grasp where Palantir sits today, we kind of have to look in the rearview mirror at how they got here. Founded back in 2003 by Peter Thiel, Alex Karp, and a few others, they kicked things off with a laser focus on defense and intelligence right after 9/11. That intense focus gave birth to Gotham, which is a platform that became completely legendary in high-stakes government operations. But they didn't just stop there. They pivoted hard into the commercial sector with Foundry, which is this massive data integration engine. Then came Apollo, basically allowing for seamless software deployment across any environment you can think of. And that whole evolution brings us to today's Generative AI Operational Engine, AIP, or the Artificial Intelligence Platform. Listen, Palantir isn't just selling you some generic off-the-shelf chatbot. They are literally building the foundational operating system for AI-driven enterprises.
Moving on to Section 2, an unbreakable competitive moat, building the corporate nervous system.
Now, what's really interesting about this slide is the concept of an ontology. While most of the market right now is just hyping up basic foundation models, Palantir is out there solving a much harder problem. How do you operationalize AI safely within incredibly complex, sensitive environments? At the very core of their solution is this ontology. Think of it like a digital twin, a complete representation of an organization's entire business. It maps raw data to real-world concepts, business logic, and actual workflows. AIP uses this ontology to ground large language models, and this is absolutely crucial because it drastically reduces those AI hallucinations we always hear about, ensuring the AI acts safely within a strictly governed environment. Customers are seeing the power of this firsthand through what Palantir calls AIP boot camps. These are intensive, hands-on sessions where companies see measurable ROI in hours or days, not years. Once you plug this kind of nervous system into a business, the switching costs are astronomically high. You simply cannot rip it out without breaking your core operations.
And honestly, this is exactly where Palantir completely separates itself from the pack. If you compare Palantir's approach to competitors, like Databricks, Snowflake, or the big hyperscalers like AWS and Azure, the difference is night and day. Those guys, they are fantastic at providing data lakes, raw compute, and basic storage. But they totally lack operational execution. Palantir, on the other hand, brings an end-to-end operational focus. Their tech is battle-tested in the most sensitive environments on the planet. They use forward-deployed engineering to get their hands dirty with clients. And crucially, they execute governed actions. They aren't just a fancy filing cabinet for your data. They are actively driving your operational decisions.
All right, Section 3, explosive growth by the numbers, the Q1 2026 financial acceleration. Hold on tight because the pace is picking up. If you want to see what real momentum looks like, these next metrics are going to make you sit up and pay attention. In just the first quarter of 2026, Palantir reported a record-breaking revenue figure of $1.633 billion. That represents a massive 85% year-over-year surge. Just let that sink in for a second. An 85% jump. This is literally the highest growth rate in their entire history as a publicly traded company.
And this brilliantly illustrates exactly where that surge is coming from. When we split the segments, it's a completely wild story.
while the U.S. government side grew at a super robust 84% to hit $687 million. The U.S. commercial side just absolutely exploded by 133%, reaching $595 million. Make no mistake, the commercial sector is rapidly becoming the absolute rocket fuel for Palantir's top-line growth. To really put this level of financial health into perspective, we have to look at their Rule of 40 score. It hit a jaw-dropping 145% in Q1. Now, for anyone out there who tracks software growth metrics, you already know that a score above 40 is considered excellent. So to hit 145%, that firmly, undeniably places Palantir in elite, best-in-class AI infrastructure territory. The momentum here is it's undeniable. In that single quarter, they closed 206 deals worth $1 million or more. And get this, 47 of those deals were for over $10 million. Management is obviously leaning hard into this strength. They actually raised their full-year 2026 revenue guidance to between $7.65 and $7.66 billion, which implies roughly 71% growth for the year. U.S. commercial guidance was lifted to over $3.2 billion, a 120-plus growth rate. Analysts are now looking at the data and projecting 30%-plus annual revenue growth deep into the late 2020s. Guys, this isn't a story of a company slowing down as it scales. This is sheer acceleration. It's the kind of momentum that could very realistically push Palantir toward a $1 trillion market cap by the 2030s.
Section 4. Premium valuation, elite profitability, justifying the price tag. Let's tackle the elephant in the room.
So the crucial point is figuring out if the underlying foundation actually justifies the high stock price. And the biggest takeaway here is that Palantir is entirely past its growth at all costs phase. They boast a totally elite 60% adjusted operating margin. They pulled in $925 million in adjusted free cash flow, representing a 57% margin. They are basically sitting on a fortress of a balance sheet with roughly $8 billion in cash and securities, and, this is huge, they have absolutely zero debt issues. None. They are scaling highly profitably while generating massive cash reserves to fund all their future R&D. But of course, all of this success comes at a cost for new investors looking to jump in. So we have to ask ourselves, is the premium price tag actually justified for a growth-oriented investor looking at late May 2026 share prices sitting around $140 to $145?
Let's break down the valuation metrics as of May 2026. At a share price of $140 to $145, the trailing price-to-earnings ratio is undeniably high. We're talking roughly 150 times. However, if you look ahead to the forward PE, it drops sharply down into the 90 times range. Wall Street clearly sees the trajectory here. Consensus 12-month price targets are sitting between $183 and $193, with optimistic highs pushing up near $255. If their earnings hit projections of $1.30 to $1.50 plus per share in 2026, the math for significant upside really starts to align.
All of this data builds a really clear case for patience. Yes, the valuation is a premium right now. But here's the golden yes, but rule of growth investing. Yes, it's expensive, but when you have 70% plus accelerating growth, those sky-high multiples compress naturally because earnings quickly catch up. We're already seeing forward multiples declining from their peaks. Now, of course, risks exist for sure. Execution hiccups on scaling, fierce competition, or macroeconomic slowdowns that freeze commercial budgets could absolutely trigger valuation compression. But right here, right now, the AI tailwinds and the momentum are firmly on Palantir's side.
Just a quick note on capital return before we move on. Palantir does not pay a dividend, and frankly, they shouldn't be paying one right now. Management is doing the prudent thing by reinvesting billions of dollars in free cash flow right back into scaling the platform and the whole AIP ecosystem. So if you're strictly an income investor, you're going to want to look elsewhere for now. This is a story about pure compounding growth.
Finally, Section 5. The final investment verdict, transitioning to a blue-chip compounder. Let's pull it all together. Let's synthesize all of this incredible data to see exactly where Palantir stands on a 3 to 5 year horizon. The bull case for Palantir is built on absolutely undeniable, structurally sound pillars. They have built an irreplaceable platform in the AI era. We're talking measurable ROI, like 26% jumps in aerospace production. They are putting up explosive 85% Q1 revenue growth. They back that growth up with elite margins and a literal fortress of a balance sheet with zero debt.
Their ontology and deep operational integration create massive switching costs and rapidly accelerating network effects. And to top it all off, they sit dead center in a massive total addressable market where literally every large enterprise and government agency on Earth desperately needs better AI operations.
To sum it all up, with a quote straight from our analysis, this isn't a meme stock anymore. It's a maturing AI powerhouse transitioning to a blue-chip compounder. Look, volatility will absolutely happen. That's just the market. But for investors with a long-term vision, pullbacks in this stock offer distinct, powerful buying opportunities to own what is shaping up to be a defining company of the AI age.
And now, I want to turn it over to you, the focused learner. Based on that incredibly sticky ontology moat, the massively accelerating commercial growth we just looked at, and yes, that premium valuation, what is your verdict? Is Palantir the hidden AI giant we've all been waiting for? Drop your thoughts down in the comments below. I'd love to read them. Remember to always do your own due diligence out there. And hey, if this structured explainer helped you cut through the noise and grasp the real data, be sure to subscribe for more deep dives. Thanks so much for joining me, and I'll see you in the next one.